In this video, I'm going to be talking about this trading strategy that helped me improve my results. And if you're struggling with consistency, struggling to get profitable results, then this video could be for you. If you guys get value from this video, make sure you like, comment, subscribe. Make sure you follow me on Instagram. I'll link it down below. And let's get into the video. Firstly, when I say this trading strategy helped me improve this certain strategy, I need to break down and make you aware that it's not one particular strategy. In trading, you see lots and hundreds of strategies to use. Should I use smart money? Should I use mechanical? Should I use fundamental strategies? What strategy should I use? But the thing that actually saved me and the thing that helped me improve my trading results was the fact that I stuck with a particular strategy, because there were so many times throughout back in 2018, 2019 when I was learning to trade. So many times that I'd go through a sequence of drawdown, I'd be losing, I'd be, take a sequence of losses, which is natural. If you have a 70, 80% win rate strategy, you're naturally going to lose 30, 40% of the time, which can equate to 1, 2, 3 losses in a row. And when I had those sequence of losses, my initial reaction was to look elsewhere. I'd see on social media that someone else has posted a trade that made 5% today and I'm down 4%. So I'm thinking, well, what are they doing? Should I try and trade their strategy? So I would look, and I'm sure a lot of you have done this, the strategy swapping, the crystal, what's it called, like the shiny ball syndrome, where you're looking for the next best thing. But the thing that actually helped me improve massively was actually just sticking with the strategy, tweaking the things. So learn a strategy from somebody. I learned from a company, they're not around anymore, but learn from somebody credible and then stick with it. Give it enough time. Sometimes, yeah, it might not be suited to you. You might not click with the strategy. You might not be able to trade it because you're busy at the times where the entries occur, or for circumstances, maybe you work full time and it's a scalping strategy, so you're not able to enter the market. But the point is stick with something long enough to give it a chance. Give it 20, 30 trades. Journal them. Look at, were they good trades? Were they bad trades? Were they trades part of that strategy despite the outcome? And stick with that. Stop changing too quick. Stop looking for the next best thing if you go through 3, 4 losses in a row. Because when I would change and look for a better strategy, or look for something because someone else looks to be winning, although they're probably not, I would then look for the next best thing, and I would end up missing out on the trades that would get me out of the drawdown for my strategy, because I'm now not looking for that. I'm looking at something else. So it's important that you're aware you need to not strategy swap. You need to stay focused on your strategy, keep improving and give it enough time for it to play out. Then, if you've given it enough time and you think this isn't for me, then maybe look to change and adapt. But adapt on the strategy and the core foundations that you've got. Don't look to completely change. Also, journaling helped me massively. We did this thing in the community I was in called ASR. It's called Advanced Self-Review, where at the end of the week, we would go over the trades that we took. Were they good trades? And by good trades, it doesn't mean that they won. Winning trades aren't always good trades, and losing trades aren't always bad trades. Good trades are trades that are part of your strategy, that are part of your trading plan, despite the outcome. So if I took a perfect A+ setup, it was a perfect trade and it lost, that would go down as a good trade. But just because I didn't win on that trade or didn't make money, it was still a good trade, because if I do that over the long term, because I've got an edge in the market, that's what produces you the consistency and the profitable results long term, as opposed to taking a bad trade, a trade that's not part of your strategy at all, but it wins. That can lead to bad habits, because you think, oh, I won today, I made good money, I'll do that again. But because that doesn't have an edge in the market, you then repeat that and you end up losing long term. So we'll do this thing called advanced self-review. So we jot down all the trades we took. Were they good trades or were they bad trades? As I just explained, we've identified what a good trade and a bad trade is. And then we'd look at any positions that we missed. So were there missed trades? Why did we miss them? Was it because we weren't at the charts, or was it because we had emotional problems? Maybe we were struggling because we took a couple of losses the week before and we were hesitant, we were risk adverse to enter the trade. Or was it because, you're just talking yourself out of it because you had, like I said, the fear of losing, fear of executing, fear of actually pushing the button and executing the trade. So we would look at any trades that we missed and identify if there was an error. And then you would review this and go over how you're going to improve. Also, once you journal your trades, every single trade that you take, and say why you've entered, why you're taking the trade. When you get a sample size over the long term, you get 100 trades, you can look back at the similar mistakes you're making, because you assume that every trader makes the same mistakes, but they don't. Certain traders will have certain psychological barriers, like someone might be risk adverse, someone might be extremely risky. So someone who's greedy, someone who wants to constantly be in the market, might take lower probability setups and get in on lower, poor setups. as opposed to someone else who's really risk adverse and wants to wait for the best opportunities, might miss out on plenty of good opportunities because they're always waiting for the highest probability. But you can identify this by journaling, writing down every single trade that you take, and you can start seeing patterns. But again, that comes from long term. That comes from seeing data over the long term. And if you're changing strategies instantly because you took a couple of losses, which is natural, it's probability, you're going to then end up not being able to identify this data, and you're not going to be able to improve. So the strategy that actually saved me and improved my trading results was sticking with something, building on it, learning from it, and not just giving up straight away because I've had a couple of losses. Next, I didn't do this, which I should have done at the start, which is why I want to tell you guys so you can improve, is I needed to so I joined a community, and because the community had successful students and they were doing well, I back tested, but I didn't back test as much as I should have. And the reason why I didn't is because I knew that the strategy was consistent, because I could see the results of everybody else that was doing it. And I back tested enough, but instead of doing 3-4 years worth of data, I just do 1 year, which is enough for me to gain and know and have confidence that the strategy works. So I did back test, but I should have done more back testing, because although back testing has pros and cons, because you can't rely on back testing to give you confidence, because when you're back, it's not real life. It's not real trading. It's not real-time trading. You know, you don't have to deal with the emotions. You can instantly skip to the next trade, so you don't have to endure like drawdown as quick, because you can just skip to the next trade. But what backtesting does do is it gives you pattern recognition. You're able to see the patterns in the market. You're able to identify trades in the market, and you're able to take and sort of practice the setups that you're taking. You know, you can go through your checklist, and it gives you confidence because you can see how often you lose. Like, I'll do a backtesting session and I can sometimes start off with 3-4 losses in a row. So if I take 3-4 losses in a row on my live account, which I'm doing on my funded at the minute, I'm not concerned, because that happens. But then I can also see coming out of drawdown, I can also see me taking a 4% winner, a 3% winner, a 1% winner, and be out of that drawdown. So backtesting has its pros and cons. I think it's important to backtest, and especially if you're learning off a company or a business that's teaching you how to trade, backtest their strategy, because that's what will give you the true confidence to know what they're teaching does work, and it gives you confidence in executing trades. From someone who was risk adverse, I sometimes struggled to execute on positions because for fear of losing, fear of being wrong. I didn't like to lose or be wrong. But by backtesting and actually seeing the results from the past, yes, it doesn't always mean it's going to happen in the future, but if I know if I execute this strategy, it has an edge, and I can identify how I'm entering, why I'm entering, and where I'm entering, I'm able to then execute on the trades and produce consistent results. Yes, consistency is always a constant battle. You know, you have to always be at peak performance and stay to your routines. But if you know you've got the data from the past, it's then making sure you can try to do it in the future. And I think backtesting is a good way to gather that data and give you confidence in executing your trades. Lastly, like I previously mentioned, you have to give it enough time. People get into the markets and they think, oh, just give me this one strategy and I'll instantly start making money. Just teach me what they know. But the problem with that is it's the probability aspect. That's the biggest problem, because every strategy has drawdown. Every strategy has sequence of winners. Every strategy, you know, you can make errors on. So to say, just give me a strategy and I'll start making money is completely wrong, because every strategy goes through losing periods. So it's how you deal with losing, how you deal with winning, how you deal with missing trades and seeing it go off in your favor when it doesn't give you an entry. You know, sticking to that plan and being disciplined. So as simple as it may sound, just give me a strategy. They're making X amount of money per month, I'll just trade their strategy. It doesn't work like that, because you could give... When I was in the community I was in, there would be like 100 students. There'd be maybe 50-60% profitable at that point, 20% break even, 20% losing, you know, something like that. But if it was just a strategy, everyone would learn the information, take the same trades and be profitable. But there's a vast array of results, because it's not just down to do this, do this, do this. You can have a plan. It's like going to the gym. You can say, go to the gym, eat this diet, do this workout, and you'll look like this. And people will be like, well, that's simple. It is simple, but it's the discipline that it takes to not get off track. Same with trading. You might see a trade that's not part of your plan that you take because you're thinking of the money. You're thinking, oh, I need to make money. So it's important that you stick with a plan, stick with a strategy, make sure that you give it time to play out, you treat it like a degree, treat it like proper education. Don't think, oh, I'm going to start making X amount of money, I'm in my bedroom, I'm just going to start printing money on a screen. It's a professional job, professional industry. Treat it like a degree, treat it like a job that you're learning. Just don't quickly swap strategies because you're having losing. Learn from your losses. Learn from your your downward periods, and make sure you're in a community with people that actually generally know what they're talking about. They're improving. You don't have to be the best, but you can keep improving. And yeah, so I hope you guys get value from this video. I hope it's open your eyes to a strategy, to not keep changing strategies, to not keep swapping all the time. Stick with something, learn with it. Yeah, if it's not right, it's change, but give it enough time. So yeah, if you guys got value, make sure you like, comment, and subscribe, and I'll see you in the next video. Thanks for watching, guys.